Hello and welcome to Wake Up and Smell the Mic S&P 500 review for Monday, March 13th, 2023. It's now the 11th. We start off in the S&P 500 daily chart in DeMark looking back to December 21. I'll zoom into the current area now. The S&P 500 daily chart has printed the combo and sequential buy setup to count. And to negate that for end of day on Monday the 13th, there must be a close above 3986.37 for the price flip to the sell setup count 1. And damage has been incurred to the downside. The trend factor down 2 is qualified and confirmed. The qualified sell TDST is qualified and confirmed. And the demand line is qualified and confirmed. And the qualified and confirmed demand line has provided a demand projection qualified at 3640.30. And there's another demand line here, which for Monday would be at 3800.29, and price would have to open below 3800.29 on Monday and stay under 3800.29, and then this ongoing demand line would become qualified. If it doesn't open underneath it at 3800.29 and then subsequently closes underneath it for end of day on Monday, this ongoing demand line will be disqualified. Underneath the demand line is this 50% qualified and confirmed propulsion exhaustion down, and tag that and continue moving down. There's going to be some downside price action for sure, especially if this ongoing demand line can become qualified and confirmed. And one would think that this down projection for D-wave, down wave 3 would be an indication of turning around and heading back up. But I say if this demand line becomes qualified and confirmed, tag the 50% qualified and confirmed propulsion exhaustion down, it will blow right through that, and then we'll be living on trend factor downs. So the next one is disqualified trend factor down 4, then the qualified demand projection is right near the disqualified trend factor down 5, and the one I'm looking at and as a target to the downside for ultimate target would be this trend factor disqualified down 6 at 3533.83. The S&P 500 weekly chart looking back to the COVID crash era. I'll zoom into the current area now. The S&P 500 weekly chart has qualified the 50% and 100% propulsion momentum down. So that could become qualified and confirmed for next week. Starting on the 13th, there must be an open lower than this close for the week of the 5th. And if it does that on the 13th, Monday morning, there's a good chance that it will tick lower than this low for the bar on the week of the 5th. And the baseline is there and could act as support. So if it performs the first two phases of the qualifying and confirmation process, then all it has to do is end the week, end of day Friday on the 17th, below this close for the bar on the week of the 5th. And then this would become qualified and confirmed, making the 50% propulsion exhaustion down qualified and confirmed at this level, 31.92, and that trend factor down 6 in the daily chart is right there also at about 35.33, and the D wave, up wave 2 that printed here will become validated at 61.8 retracement for Fibonacci, and that looks like it's at 3794.47. So there's a little bit of hope there in the weekly chart that it will meet its projection for Fibonacci retracement, maybe a little lower, possibly this 76.4%, and then start moving back upwards. However, all of that is contingent on Tuesday's CPI report at 7:30 a.m. Central Time, 8:30 a.m. Eastern Time right there. And you can see the parameters that Market Watch has on here, taken from the Wall Street Journal, I believe. And I can't make the statement of what's good and what's bad and what moves which way on this one anymore. But this will be a big report, so if there's an indication that the inflation rate is going down across the board, I would say it needs to, then we will definitely avoid everything I just talked about for that 35.30 level in the S&P 500. If there's a hot inflation report, then it's pretty much a given that we're going to retest the lows from October, 3,500, 35, 33 level. We'll review the employment report from this past Friday right quick. You can see that it was hot to the upside. However, the unemployment rate ticked up and average hourly earnings ticked down. So that big, huge downdraft on Friday was from the Silicon Valley Bank, and we won't get into that, but they went into receivership out there in California, and everybody's jittery about that. Hopefully there won't be bank runs on all those regional banks. They certainly did horrible for Friday. So hopefully cooler heads will prevail. The NYA top caller chart, we'll look at the NYA to SPX ratio, basically value versus growth, and see that the financial debacle starting with Silicon Valley Bank has really thrown this to the downside. So growth is definitely not doing as bad as value. And that has thrown the NYAD below its falling peaks trend line here, support and resistance. And the ratio adjusted McClellan breadth oscillator is starting to plumb some of these extreme lows here with these extreme valleys. So that is really hitting the skids. NYA price pretty much nailed the support and resistance green line at 14,824. Bounced up a little bit, closed at 14,894.18. And for those who haven't been following along for any length of time, knows that this green zone here would represent S&P 500, 3,500 area. And the McClellan ratio adjusted volume oscillator is starting to plunge down into these depths down here. It's already surpassed some of the valleys here, and it's going after this big one from the October. And it's needless to say that the ratio adjusted summation index of the ratio adjusted McClellan breadth oscillator has failed to hold 500, failed to hold 250. It's a 124.98 and looks like it's going to go down below zero again. The ratio adjusted volume summation index of its McClellan ratio adjusted volume oscillator up here has already gone under zero, negative 109.90, and RSI 14 has gone below 30. It's at 28.17, so that's a crash right into the ground. Here, back here, it crashed into the ground and created a big ditch before it stopped and then headed back up. It's really quite incredible after hitting the 50 equilibrium line from a mean reversion bounce and then just hit the skids like that. Again, that's the Silicon Valley Bank doing that. And it looks like the on-balance volume, they're starting to head for the exits now. And the New York stocks only AD line and its ratio adjusted McClellan breadth oscillators still live in this horrible bearish divergence. I took the fledgling bullish divergences off I had on here last week, these blue arrows, so that's been blown out of the water. And needless to say that the intermediate term volume oscillator for the NYA has gone below this low here, so it's headed straight down. The intermediate term breadth oscillator is below zero and headed down, so this will make a lower low if it gets below this October low here. And the instruments above their 200 period simple moving average in the NYA came out of the 60 to 70 zone and straight down. That's again Silicon Valley Bank doing that. The NASDAQ Composite overbought oversold indicator looks the same as the New York AD overbought oversold indicator, so we'll look at this to see that the 30 EMA in green is headed straight down. There's a first level here at the top of the oversold zone here, about 650 or so, and that's negative 650. And then another one underneath it there, another one here, and a bad CPI report for Tuesday, along with the Silicon Valley Bank debacle. If there's contagion, this will definitely go down into this oversold zone here, meaning the green EMA 30, the lowest it's ever been was back here at the beginning of the year of 22. We know how horrible that was. The Shanghai Composite monthly chart shows it starting to roll over also. So a horrible recession isn't going to do China any good, even though they're reopening. A horrible recession in the rest of the world means they don't have to produce as much goods as they would like to. So this head and shoulders topping pattern in purple is still valid. There was a break below the neckline here, but it didn't make it down to the measure rule from the top of the head to the left shoulder here. And it came back up and did not make it to the cancellation line here, this horizontal purple line on the right shoulder going straight across, didn't even get close. So if it goes back under the neckline, it's still a valid thought that it could make it down to here, 14.2% from the top of the head here, left shoulder here. So let's see what happens there. And the Shanghai Composites Coppock curve for the monthly chart is probably the best in the whole world here. You can see it's below zero, and in the thumbnail it definitely has a defined hook around to the upside. So these trend lines here, starting in 2005, this red dashed one and the neckline intersects pretty much close by here. Those could hold and not go under the neckline and challenge this measure rule down here. It still has to turn around and get above this horizontal line to negate the head and shoulders pattern, and that goes back to 2019, just about, yeah, beginning of 2019. The S&P 500 support and resistance levels big board chart shows the gray areas at the daily Bollinger Band lower band, daily horizontal support from 12/21/2022, daily horizontal support from 01/26/2021. And I've given everything under 3871 a red color all the way down to that ongoing demand line at 3800.29. To the upside is the downtrend line from 01/04/2022. The top of the cloud, 26 bars back concerning the lagging line. R1, the daily Fortress Fed resistance at 3906, and the daily Channel 3 low. And the S&P 500 daily AD line and NDX NASDAQ 100 daily AD line are both below their 21 EMA signal line. The ROC 1 closed below its negative volatility line at 1.0, closed at negative 1.45. ATR2 shot up to 82.22, fast approaching its pain threshold, and the PPO extreme worsened. It's at negative 3.42, and the New York traditional McClellan-Broth oscillator to get back to zero would require 5,298 advancers over decliners to get back to zero. And as we've seen with the NASDAQ Composite overbought, oversold chart, there's still plenty of room to go to the downside. So this could get worse. Have a great day.